Hello students and welcome to the lecture. So students, as we know that we had started the discussion over the financial system in the last lecture. Alright, I had told you that basically we are going to discuss the several topics in the financial system starting with the Indian banking system. Okay, in the Indian banking system, what I had told you that basically we had discussed the banking history, the banking evolution, the types of banks in the previous series of the financial knowledge already. So what is the motive behind discussing all these areas right now here? Remember, I had told you that basically we are trying to connect the past with the present and taken it to the future. All right. This is our, you can say, the main aim and the main significance in this particular series. Okay. So if we continue with the topics, so these are the topics we are going to study under the Indian banking system. Like we will start with the generations of the banking. Thereafter, we will cover the banking sector development 2014 onwards and the risk in banking. Okay. In the previous lecture, we had started with the generations of banking, and what we had seen, basically, we had seen that there are total 4 generations in the banking. Right? First generation, second generation, okay, third generation, and the fourth generation. Okay, these are the generations of the banking. And I had told you, remember, out of all these generations, these 3 generations are the generations which having the well-defined time period. Okay, only the first one is the generation which do not having any defined or fixed time period. Okay, that's what we had discussed in the previous lecture. Even when we were discussing the first generation, we had taken the overview of the Swadeshi movement, how the banks were established, why we felt that Indians should participate in the banking. All of these things we had discussed in the previous lecture. I hope that you have revised the previous lecture in a good manner before you have come for this lecture, as I have told you many times that it is for your own benefit. Okay, so now let's begin with the topic. After finishing the first generation, now we are going to talk about the second generation. Okay, the time period is very, very important. Okay, because remember in the previous lecture also, I had told you when we talk about the generations, basically generations are the time period in relation with the existence and evolution of the banking system during that time. Okay, so please keep this thing in your mind. The generations are basically the time periods in the relation with the existence and evolution of the banking systems during that time. Okay, so when we talk about the generations, second, third, and fourth, we must be aware about the time period, like during which time period the generation was existed, so that we could evaluate the existence in the evolution of the banking system during that particular time. Got it? So let's begin. After independence, because if we look at the time period is for 1947 to 1969, right? That's the time period. So if we look at that time period, so the first one, 1947, is the year in which we got the independence. Okay. So if we talk about this in the particular manner, then we can say After independence, the Indian banks focused on the consolidating resources primarily mobilized through retail deposits. Like in the previous lecture, I had told you one thing, that when the Indians basically started their participation in the Indian banking economy, what happened to us? We had applied the emotions, not the rational approach. Okay, we had just entered into the market, but we do not have any capital equipments, we do not have any management experience, we do not having any well defined organizations, and because of this, what happened? Our efforts were get wasted. Okay, and we had seen that many of the banks which were established during that time were collapsed one after another. Okay, so when those banks who got survived the period, okay, these banks were focusing on the consolidating resources primarily mobilized through retail deposits, because there are some reasons for it. Like we could say, after the independence, first of all, the British policies were no longer applicable on the Indians. Okay, because if we talk about the British policies before the independence era, they were trying to, you can say, straighten, and you can say making the divisions in the interest of their own people. Okay, so when we got independence, it means that now we are free to formulate the policies in our favor. Okay, so the British policies were no longer existed. Second thing was that, if you remember, when we're talking about the challenges, what happened? The banks were doing interconnecting lending. It means that they are providing the loans amongst themselves, which created the financial web. Second is the crossing lines between banking and trading. Okay, so these were the two main reasons why we thought of consolidation. Because if we consolidate, it means that if we talk about the A, B, C, D, E, if these are the banks, if we consolidate maximum of them, first of all, the resources will get combined. Okay, second, the interconnected lending will be protected. Why? Because now, if we consolidate, suppose we got only three banks, A, B, C. Okay, so now the another entities cease to existed, so that we could not provide and generate a loan from each other, because now their resources have been combined. Similarly, the lines between the banking and the trading could be well defined. Okay, so that's how the system works. Okay, retail deposits refers to the funds deposited by the individual customers, such as saving accounts, fixed deposits, and the recurring deposits. Now, here is one thing. Remember, in the previous series of the financial knowledge, I had told you, if we talk about the bank, okay, so the prime role of banks are which? Which are the prime roles of the banks? Tell me. We had discussed two main prime roles of the bank. First is deposits. Second is loans. Okay, these are the two prime aims of the bank, or you can say two prime functioning of the bank. Okay, but in the previous lecture just only, we had seen that the banks were entering into multiple domains. Okay, so this created the, you can say, distress and the financial instability amongst them. So when we got independence and when we became the independent country, basically we focus on the, you can say, we focus on the defining of the banking functions in the initial time. Okay, so that's why we focus on the deposits, which we call the retail deposits. Remember, in the types of banks, I had told you there are two types of banks: banking activities, retail banking, wholesale banking. right? What was the difference? I had told you. Now you have 10 seconds to think about it, then I will tell you. Just try to get an idea what I had told you in this lecture. So your time starts now. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Time's up. So if you have recalled it, it means that you have well revised the session. If you haven't recalled it, you need a practice. Okay. So basically, if we talk about the, you can say the retail banking. Retail banking. And then we talk about the wholesale banking. Okay. So retail banking is generally focused on the commercial, or you can say traditional banking practices. Okay. But if we talk about the wholesale banking is not only related with this type of banking, it's a investment banking. Okay. It's a retail banking, or you can say it's a corporate banking, and etc. It means that the domain, or you can say the banking domain in the wholesale banking is much, much larger than the retail banking. Okay. So when before the independence era, our banks were trying to get engaged in the kind of wholesale banking. It means that they were trying to enter in these multiple domains. But remember, wholesale banking requires two main things: better capital arrangement. Second is effective management. Okay. These two are the basic necessities regarding the wholesale banking. The capitals are too good so that we could arrange the equitable amount in the investments, retail, corporate, and etc. Second, effective management. It means that when we entered into these domains, we could manage the resources in that areas in order to optimize the returns. Okay. Both the things were not present with us. Okay. Neither we were well capitally equipped, nor we had the effective management. That's led us to the failure. Got it? So, to counter the failure, what we did, we made the SWOT analysis: strength, weakness, opportunity, threats. Okay. And we find out that instead of enter to the, you can say, wholesale banking, we first focus on the retail banking. It means that first we should try that we could generate our normal banking system, the commercial or the traditional banking system. Why? Because prior to the independence, the entire economy were under the control of the Britishers. Okay. So if we want to shift it from the Britishers to the Indian side, we first require the consistency and stability. Okay. Until or unless we are not consistent, we are not stable, we could not hold the banking for the long. Okay. So in retail deposits, we had the individual customers. Okay. We had offered the saving accounts, fixed deposits, and the recurring deposits. Okay. So these are the main aims. Banks relied heavily on the deposit to fund their lending activities and other operations. Now come back to the picture again. Okay. This is the bank called XYZ. Okay. The bank having two main operations: the deposits, second is the loans. We had discussed the deposits are basically the you can say in deposits, they have to give interest, which is the 4%. Okay. On loans, they basically take interest, which is the 6%. For example, give interest, take interest. In between of this, the remaining 2% is the amount received by the XYZ, which is the income, and you can see the profit of the XYZ. This is the scenario. Okay. But beside deposits, they having the, okay, or you can say for lending the loans, they require the capital plus deposit. Okay. Because until or unless bank itself do not have the you can say capital or the liquidity, how they could lend the loans to the people who are seeking the loans, right? That's why the banks tried to get the capital and the deposits. As we had discussed that the capital were not in a sufficient manner. Okay, so the banks were heavily relied on the deposits so that they could generate a amount with themselves. They could grant it as a loan, and what they will receive an interest, and their income will be there. Okay, so remember, banks relied heavily on these deposits to fund their lending activities and the other operations. Okay, because this is the major chunk of their capital. Thereafter, concentration of resources towards business, families, or groups. During this period, there was a noticeable trend of Indian banks directing a significant portion of the resources towards a limited number of businesses, families, or groups. Now, it is a clear cut, you can say, the dialogue which I had told you many times. No one is more greedy than banks, right? This is a famous dialogue I had told you many times. No one is more greedy than the bank. Okay. So if we talk about that era, when we got the independence, we were, you can say, not so rich country. Okay. We were basically suffering a lot. All right. Everyone was seeking for the credit facility. Okay. Which is presented with the banks. But now this is the case of favorism, or you can say profit optimization. Favorism or the profit optimization. This is the main game. Okay. So now if we talk about it and talk about this. Okay. Suppose there are two people. He could bear the loan at 20% interest. He could only bear it on 8% interest. What will happen? The bank will try to maximize its returns, and then that's why they will provide the loan to that person who could bear it on the high interest rate. Because bank always try to maximize its profit. Okay, and they had the limited resources. For suppose you can say, suppose if they only having the 1 lakh with them on that time period, they had only 1 lakh with them, and they had to grant it as a loan. 20% of one loan, 1 lakh is the 20,000, right? If the bank granted the loan to the person who could bear it on 20%, the total amount the bank will receive, okay, the total amount the bank will receive is 1,20,000. Okay, but if the bank offered the loan to that person who could only bear it on the 8% interest rate. So 8% of the 1 lakh is 8,000. So how much amount the bank will recover? 1 lakh 8,000. Just look at this picture. Which amount is higher? Obviously, the first one, right? And we are talking about the time period in which the banks were trying to, you can say, optimize their returns. It means that they were in a race to get the more and more returns. In such a scenario, their prime focus is for the limited number of business families or groups. Why? Because these are the consumer base who could bear the loans at the high amount. Okay? This concentration of resources was driven by various factors, including the historical relationships, perceived creditworthiness, and the need for large scale investment and key industries. For example, you can say, besides the approach of optimization of the profit, there were so many other things also. For example, suppose this is the okay, let me tell you one thing. All the major banks were basically established by the businessmen or king, or you can say wealthy people. Because on that time they had the capability to establish the systems like the banks. Either they were the businessmen, they were the king, they were the wealthy people. Okay? All the banks were established by them. For suppose this is a person, this could be anyone. Okay? Whether the businessman, king, or wealthy people. So he will having the people in his circle like him. If he is wealthy, the friend of him were also wealthy, right? So what will happen? Suppose if we establish the bank XYZ, okay? So the XYZ is now a bank, and XYZ has to grant a loan to the people so that it could earn the interest. So if they both are friends and this person is in need of the credit, what will happen? The XYZ will divert the you can say loan to that person. Okay? Because they having a good historic relationship, and second, credit worthiness. Because if that person is rich by either businessman king or wealthy people, he could bear high interest rate. Okay? And if he could bear the high interest rate, there are two interests of that particular person has been secured. First, he would build a strong friendship and relationship with that person because he had helped him during the time of crisis. Second, he will receive a high number of interest, or you can say maximum optimization of the profit, because that fellow could bear the high interest rate. Okay, so that's the reason, one of the reason why the banks of that time were inclining towards some specific group of people. Got it? Thereafter, what we have the overlooking credit flow to the agriculture sector. One of the criticisms of the second generation banking was its failures to ensure an adequate flow of credit to the agriculture sector. Okay, now this is the thing which we would like to connect in the present scenario, and then we will take it to the future also. But we have to start with the past. All right, when we talk about the India during the time of independence, we were the agrarian economy. Please check the spelling. Spelling might be wrong. You can check it on the Google. But agrarian economy basically means the economy which is primarily focused on agriculture, right? So because of this, our large number of workforce mainly you can say about roughly 75% of the workforce engage in the agriculture sector, or you can say the primary sector. Okay, but the banks were trying to divert the amount towards the secondary, also called as the manufacturing sector, and the tertiary, also called the service sector. These sectors had a minimum number of workforce indulged, but still the banks were focusing on financing these sector instead of financing the primary or the agriculture sector. Why? Because the persons who are being indulged in these areas were often able to bear the high interest rate, because these were the business houses and the business families. Okay, but despite of a huge workforce involvement, the agriculture sector was basically the persons who could bear it only on the low interest rate because these were the farmers only. Okay, so as the banks were focusing on the optimization of the returns, they ignored it, they favored it. Okay, so that's why it is the criticism of the second generation banking. Okay, so this is the part. In present, we know that there are so many initiatives which we will discuss in these areas also. Okay, there are so many initiatives so that this thing could be avoided. And if we talk about the future, if the Indian workforce indulge in some sector, and if that particular sector is being fed up by the capitalization, and basically you can say fed up by the required credit facilities, so there will be a growth opportunities in the future and in present also. Okay, so this is the scenario. Now if we move forward, despite agriculture being a crucial sector for the Indian economy because a huge amount of the workforce was indulged, all right, banks often neglected it in favor of lending to industrial and the commercial enterprises. Why? I had told you, because these are the wealthy people who could bear the loans at the high interest rate. This neglect had adverse effects on rural livelihoods and the agriculture productivity, because these persons required the credit, but the doors of banks were generally not open for them or not in a welcoming condition for them. Got it? Thereafter, reasons for concentration of credit. Several factors contribute. Several factors contributed to the concentration of credit towards business families or groups, like historical relationship and trust built over time. As I have told you, if the person who established the bank is a wealthy person, then his friend circle will also be a wealthy. And if the wealthy are there, they must have the historical relationship with them. Okay. Perceive credit worthiness based on the track record and the stability of these entities. Because suppose if you are uh, giving the interest or the giving the credit to the person who is doing the agriculture, and agriculture on that time is a much more volatile than it's today. Okay, because we didn't have a proper irrigation facilities, fertilizers and other facilities which are being provided to the farmers nowadays. Okay, so there is no guarantee that you will get a fixed and a good return after providing the credit. So that was also the reason that the instability and not so good past record of these farmers and the laborers, and you can say the low class people, lead to the banks to focus on the persons who had the track record in a good manner and the stable in the market. Okay. The need for large scale investment industries that were considered key for economic growth and the development. Okay. Because even the government is starting supported the credit flow towards these areas, because we believe if we focus on the secondary and the tertiary sector, we would achieve better, which is not a bad idea. But this you can say destroyed the agriculture sector a lot. The concentration of the credit towards a limited number of entities had several consequences, like the concentration of credit towards a limited number of entities had a several consequences, like uneven distribution of credit, with certain sectors and regions receiving more attention than others, limited access to credit for smaller businesses and the agricultural activities, reduced competition in the banking sector as sources were primarily directed towards established entities. So these were the main consequences we had faced due to the concentration of the resources. Okay. Impact on agriculture sector. Neglection of the agriculture sector in terms of credit flow had long-term implications, hindered the modernization of the agriculture, limited investment in rural infrastructure, and affected the livelihoods of the millions of farmers. If we talk about the overall impact and the conclusion, the period of second generation banking in India was characterized by the consolidation of resources and the concentration of credit towards specific business families or groups, which we had discussed already. While this period saw the expansion of the banking services and the mobilization of retail deposits, also highlighted the need for a more inclusive approach to the banking that addresses the needs of all sectors of the economy, including the agriculture. Okay, so students, in this lecture, basically we finished the second generation also. In the next lecture, we will continue with the third and the fourth generation. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. This note, let's end this lecture, and what we say, we say.